Well, compare that message, what Peter was just talking about, to what several former Fed presidents told us last week.
I don't think I can ignore the events of the last couple of weeks, but I think I have to evaluate them as a risk to the economy.
We remain, I think, below what we can be in terms of employment. So I think there's room for improvement, and both in terms of prices and employment.
Given what we've seen recently, I think we just have to wait and see. I don't want to take too much signal from something that could turn out to be noise.
Scott Martin, as promised, and Lee Munson, as promised, back with me. Scott, what's your take? I mean, it seems like no, and then, well, maybe.
Yeah, you know, if the market goes up 100 points or 200 points on the Dow, yeah, maybe the Fed's back in the game. And then if it goes down, they're not. I mean, I think this is crazy. To think that there's this much dissension on the Board of Governors right now just tells you that they should not be raising rates. I mean, things should be certain. I agree with what Mr. Fisher said, but I also think that things should be a little more certain. And don't forget, yeah, 2% inflation. They used to target 2.5%, but they cut that because inflation numbers were so bad. I think you got to be certain before you put a rate hike on the table here, which I think will be disastrous for stocks if they do it next month.
Lee?
No, I disagree. I mean, I understand what Scott's getting at, but here's the bottom line. We've got to have some ceremonial quarter-point hike, so if we hit some recession next year, we've got something to cut from, because nobody wants a QE 2016. So I think the best, I mean, come on, nobody likes that QE stuff because we can't see it. It makes it harder for us to trade bonds. I think the best thing the Fed could do is raise rates next month in September, and it's not going to blow up the market. In fact, I think the market would rally on it because people would say, hey, things aren't that bad. The Fed felt that unemployment was good enough, on trend, inflation lackluster, but employment's where it's at. If they don't, then it signals one thing, that we're weak and that we need to keep sucking off of mother's milk called the Fed. And I think that's bad for the economy. It's going to make the hangover worse.
Lee Munson, well argued. Scott Martin, well argued. And as we heard Stanley Fisher say, we could conceivably raise in September. That's not to say we will. So good couched language, as always, from the Fed. Thank you both.